What's good, Black Star Podcast? Welcome back to the channel. This is your boy Jared. Y'all, imagine you going to the dealership and you get to the financing part, and you have your 60 month, your 20, not your 20 month, your 60 month, your 72 month, 84 month, loan terms. Okay. Now imagine if you go to financing and you see on there an option to finance for 15 fucking years. Yeah, look at this shit.
It's my husband's truck. My husband drives a 2020 GMC AT4 Sierra 1500. We bought it in August of 2022. Financed it for $78,000. He still has a remaining balance of, I think it's $72,000 or $74,000. I haven't really checked recently. His payments are $1,600 a month. So y'all thought my $1,400 Tahoe payment was bad.
$1,600 for a truck payment. I don't care if you trying to sell me some bullshit on the side of the road. I would never in my life sign up to pay $1,600 for a fucking pickup truck. And he's been paying on this truck since 2023 or 2022. And he's only paid off a $1,000 or $2,000. Nah, bruh.
His truck payment is $1,600 a month with an APR of 14%.
What's up, guys? Welcome back to the channel, man. Welcome back to the channel. We got a lot of different clips to react to, guys. I ain't gonna do a whole bunch of talking. Let's get into it. Let's go.
Let's start with the 50-year mortgages. What does that mean for homeowners?
Okay, so typically when you're taking out a mortgage, the traditional benchmark time that you have to pay off that mortgage is 30 years. So I've been kind of crunching the numbers to figure out if you do a 50-year mortgage, is that going to save you money? And here's what this looks like if you look at a monthly basis.
Okay.
Right.
Your typical monthly payment on a $400,000 home loan, that's about the median priced home in the U.S. for a 50-year mortgage, $2,800. At a 30-year mortgage, this is at today's interest rates.
Okay.
It's about $3,000, almost $3,100. So you are saving close to $250.
Wait, so $400,000 monthly, $400,000 home loan. A 50-year mortgage would be $2,800. For a 30-year, $3,100. What the fuck? Nah, partner. You getting fucked in the ass with no lube on both of these.
With this option every month.
Okay.
But as you said, you're paying this off over a lot longer time. So that means you're paying more interest. Look how much more interest, Kira, you're paying over 50 years and 30 years. $816,000.
So $816,000 interest on a fucking 50-year mortgage?
Hey, bro. $816,000 in interest? That is crazy.
In interest versus $400,000. I mean, still a lot of interest, basically. So the argument against this is that you're ending up paying way more money to your bank. Your lenders.
I was going to say the banks are going to be happy. The lenders are going to be thrilled.
Exactly. That's sort of, while it might mean a little bit short-term gain, over the long term, you are making more money for your bank than you might be for yourself.
So who at the White House is talking with various banks?
We did have dinner with a couple of those CEOs.
Crazy,
There we go. They had a dinner, right? Interessante. All right, let's talk then about the 15-year car loans and what that would look like.
Yeah, so similar idea, right? So the same idea there is you're paying out over a longer amount of time, and it's going to lower your payments for a car. Car loans are a little bit tricky because we have seen that car prices have been so high, and that's meant that people are buying used cars, so then used car prices go up. Similar math there, though. Ultimately, if you're in debt for longer, you're going to pay more interest. Might make it shorter, might make it cheaper in the short term, maybe not in the long term.
All right.
15-year car loans? That's out of control, man. There's no way I sign up for that. I mean, that means you completely out of your price range. I can't even imagine paying for a car for 15 years. Come on, man. These cars these days won't even last that long. It's no way possible. Please don't do this, guys.
Ace Auto, great. Oh!
Yeah, that dude.
Your last scheduled payment? That's too much.
Minimum payment is $1,455.57. What is this car? What is this possibly car? What is this? Wow, is this? This is elite. I think it's the second highest payment I've ever seen in the history of this show. I think 2000 was the top. What are you doing? What do you have, Soul?
Okay, so it's a 2023 Jeep Grand Cherokee.
A 23 Jeep Grand Cherokee. Man, oh man. Oh Lord, no.
Okay, this is how.
Cherokee for $1,500 a month?
Okay.
Ain't no way I'm paying that much for no daggone Cherokee. And I'm a daggone Dodge fan, guys. And there's no way I'm paying that much for a Jeep.
Listen.
Story. It's a long story. Okay,
there is
so
a story to this.
all right.
Long story, my ass. I'm going to fucking buy me a used Excursion off of Facebook Market before I do that shit. You getting a used Excursion. It may have 300,000 miles on it, but you know what? Replace the engine, fix the rust, and rebuild the engine. Shit, you fine.
Listen to this.
That's crazy.
You're getting fees added at a 14.18% interest rate as well. Oh, principal balance $64,378.09. Why?
He's got some vocals.
I got nothing to say.
So,
I mean,
I got a 2015 Dodge Ram, whatever. It was like 20K.
Patriot, we love it. Okay.
20K. A couple months later, the engine fucked up, transmission fucked up, everything fucked up. That truck went. When I called the insurance, I'm like, hey man, because since it's a used vehicle, they gave it to me as is, whatever, from dealership. So they were like, hey, we're not covering anything. You don't have warranty on it. So call your insurance. I called my insurance. They asked me 2 questions. Did you hit something? No.
Yeah, it's insurance.
Did
I don't
you
know what the
fucking
fuck
did something
Wait a
hit you?
minute.
And I was like,
This man will call the insurance company for warranty work. Man, hold on, Slim. Let me go back, man. I know he could just say that.
from dealership. So they were like, hey, we're not covering anything. You don't have warranty on it. So call your insurance. I called my insurance. They asked me 2 questions. Did you hit something? No.
Yeah, it's insurance.
Did
I
you
don't know what the
fucking,
fuck
did
what I
something hit
said.
you? And I was like, no. They're like, all right, well, you look.
Yeah, I agree.
So,
That's
all right,
crazy.
I didn't know that. I thought they fucking covered anything if the truck doesn't
Insurance?
work. Yeah,
No,
dude.
man.
If it has
common
full
sense. I even
coverage,
told them.
if it has full
warranties.
coverage, you would expect it to be
Oh my
coverage
God.
for the fucking
Continue.
truck. Okay, point
That's
is,
crazy.
after that truck, I took it to the dealership to figure out what the fuck was wrong with it. It was the engine, transmission, some other shit was wrong with it. And so they're like, yeah, man, like they basically sold you a lemon. Like, it sucks. After that, I was like, okay, so what are my options? They're like, well, you can pay the repairs. It's like 15 grand. They're like,
You can pay the repairs on a truck that basically blew up on you. Nah, I'm good.
or, you know, you can trade it in. And I was like, well, I owe 20 on it. I was like, I'm not
over
in.
negative equity.
I rolled
Yes.
over negative equity.
What's the
into
truck worth? Oh, I have it. What do you think it's worth?
The Jeep Grand Cherokee? It's worth like 28K now.
It's worth $27,000. You owe
Boom, I was close.
$64,378.09.
Crazy.
15% interest
Getting
rate,
out of it.
$1,455. And you're behind.
You're upside down 40 grand. Man, fuck that.
Yep.
Yeah.
What the fuck are we doing? And then what's this? Is this another car? 2024 something?
No, that's the RV.
Man, this
Wait. You have an RV too?
is out of control. I mean, he just See, this is why I be telling y'all. These dealerships do not care. They will just keep rolling that negative equity and just keep rolling. First of all, he called his insurance company about warranty work. The current vehicle he had was a 14% interest rate, and he was super upside down in that car. He had a problem with it. Now he wanted to trade it in on another car, make his payments even higher. I mean, this is just a bad situation all around. Please don't do this, guys. This is the reason why I make these videos, because y'all can see what people are doing and you don't make that same mistake.
Sometimes it's just better to turn down a deal because you can foresee problems that are going to come. So yesterday I had a deal with a client, father and mother and daughter. And the car was for the daughter. So we had the father and the daughter on the application together. Long story short, got them approved. Down payment was about $2,000 down. The payments came out to $300 a month.
That ain't bad.
An APR of about 22. Mind you.
All
right.
I understand. This Bama said interest rate was 22%. Go back.
An APR of about 22. Mind you.
Oh, nah, Slim. Tripping.
Right. I understand in today's world that a 22 may seem pretty high. I understand that. And I get it, you know. But when they condition the deal, our lenders, and you don't have any sort of good credit, I'm talking about you below 500, you shouldn't be fighting about the rates. You should be happy that you even got approved. So long story short, the boyfriend of the girl that was buying the car wanted to be Mr. Finance Guy. I don't mind explaining these things to you. We're transparent as possible. But he had a question on everything. Why is the rate this? Why is the monthly payment this? Why is the down payment this? I had an answer for everything. But he wanted it to be less, regardless of the situation. So when deals start off like that, it's best to just let it go. I offered them, I go, hey, you're not buying the vehicle, number one. Your name's not on this application, number two. But if you really want to shop the rate, if you really want to get a better deal, go right ahead and go talk to your bank. Go find a credit union. Go find someone that's willing to lend you money at a better rate. We as a dealer are not obligating you at any point to use our lenders. But you came to us because you needed help. And you came to us because you know your financial situation is not up to par. It started off rough. The gentleman was becoming super overly aggressive, which we don't tolerate that. As the owner of the dealer, I called the deal off right away. I said, deal's dead. We're not doing this deal. It started off rough, and it's going to end rough. And sometimes it's better just to pass on deals.
I mean, I kind of agree with him. When you got bad credit, you can't go in a dealership making demands. You just can't. You just can't. The ball is not in your court. And if you get quoted a 22% interest rate, it's not time to finance. I don't care what the situation is. And a lot of times people go in with, you know, unrealistic expectations when they have bad credit. And I understand the boyfriend wanting to negotiate the interest rate and asking questions, because even when you got bad credit, you still have some say so. I mean, because they're going to always quote you higher than what you're actually qualified for, even with bad credit. But he's right. Don't come in a dealership like you got A1 credit and your credit score is under 500, because a lot of times they're not going to be able to get you approved. So, you know, it's just one of the.
You know, it's insane to me that people are still wanting to pay these outrageous car prices. All I'm saying is this. The prices of vehicles nowadays have gone up, and they keep going up. They aren't worth it. They'll never be worth it. I don't care if these motherfuckers are made out of gold. I don't care if they are bedazzled with fucking Swarovski crystals. They will never be worth the kind of money that they're selling them for. At the APRs that they're selling them for. Shit's insane. But anyways, like, share, subscribe channel. Support the podcast. Support the podcast. Like, share, subscribe, support the podcast on Spotify.com. I'll catch you guys on the flip side. Thank you guys for listening. Bye, guys.